Jonathan Turnbull, Managing Director, Head of Canada for Harrison Street. Harrison Street has been an investor in alternative real estate for over 20 years. We opened up our office in Canada 5 years ago, focusing on alternatives. What we focus on are seniors housing, student housing, life sciences, self-storage, digital, and medical office. Within the Montreal market, our priorities are really focusing right now on the seniors and on the student side of things. Although the other sectors are active in the Montreal market, we see better value today, focusing in on the student and the senior side of things. It's a lot to unpack with that question. Starting with the regulations, demographics, and foreign investors. On the regulation side of this, every market has regulations. Be it positive or negative, you can compare one or the other. At the end of the day, Montreal is different. Quebec is different than the rest of Canada. The key, I would argue, is from a regulatory standpoint, regulation standpoint, find a great local partner. Don't assume that you can do it on your own. And I think in Montreal in particular, finding the right partners, there are great partners here in Montreal on the development side of things that can really help you manage through that different regulatory environment. So I don't view it as being, it's different. I don't view it as more difficult, whatever. It's just find a good local partner. On the demographic side of things, like there's strong underlying demographics in the Montreal market and the sectors we focus on. In particular, the student side of things. It is the largest city. It's got the largest population of students across Canada. And so the underlying demographics and the demand for student housing is very strong. On the senior side of things, we have the silver tsunami in Quebec, like we do across the rest of Canada. But arguably, the seniors in Quebec are more used to the seniors housing platform and strategy. It has the highest penetration rate in the country, so it's something they understand and they've adopted. So the underlying demographics in those two sectors are very strong. There's great industries like life science and things like that to support those sectors, but the demographics are there. On the foreign side of things, what's interesting for us right now is our fund in the Canadian market. Although Harrison Street is based out of Chicago, we are a Canadian-owned firm. We are 75% owned by Colliers International. So we're not really a foreign investor in the marketplace. We're Canadian, but our investors are foreign. So 50% of our fund is European in the investor base, 50% is domestic Canadian. And the European investors are very excited about Montreal. Like it or not, if you're from Western Canada, Montreal is still perceived as, Toronto, Montreal, Vancouver. Those are the markets everybody talks about. So foreign interest in Montreal is strong, and foreign interest in the Canadian market is very strong. I mean, over the last year, our investor base has grown by 75%. Over 50% of that has been from European investors. So right now, the mood is very strong, European investors in particular, into the Canadian market, and Montreal is one of their target markets. In our target sectors, new development, we're trying to focus away from the opportunistic stuff. As we only have so many hours in the day and our investors are looking for us to put capital to work, we have to be focused on the more systematic opportunities. So we look at the underlying demographics and the underlying scale of supply to really attack that demographic. And we really see that opportunity in the seniors and on the student side of things. It can be programmatic. We know we need more beds to be sponsored. The universities just down the street. We know we need more beds for our seniors. It's obvious. We've seen an undersupply of new development in both those sectors. So we tend to focus on those systematic opportunities. Yeah, there are going to be opportunistic opportunities in life science, in self-storage, in digital with data centers. But those are really opportunistic approach. As we every single day walk in, we're trying to attack the more systematic segments. And that's why we tend to focus on those two sectors. Right now, we only have one asset in Montreal. We've looked at a lot more, but we only have one asset, which is the Palais at 2025 Peel Street. It's a block and a half from McGill. It's student housing, obviously. It has around 300 beds. Quite frankly, as I said, there's been a lot we've looked at. We just haven't pulled the trigger on them. I think, going into 2026, by that point, I think you're going to see us expand that portfolio quite substantially. Right now, we're looking at 3 different student deals in downtown. We are also looking at 2 seniors assets in the suburbs. I would expect by 2026, we'll have about 3 student, my objective would be 1,000 beds in Montreal, by the end of 2026 and a couple of, senior assets. 5 years from now, it's a long time. I think our fund is probably targeted towards $8 billion of AUM at that point. And I would say $1 billion into the Quebec market is a logical thing for us to, be at a minimum to aspire towards. And so we've got a lot of wood to chop and a lot more to invest over the next 5 years. Market risk, I think the biggest thing for us whenever we look at, since we've got such a large exposure to the residential side of things, be it on the senior and on the student side of things, we always look at rent control. And Quebec is a different market than the others. Doesn't make it any better or worse. The reality is it's just a different market. And we focus on it across the entire spectrum of the country. Even in markets like Alberta, which doesn't have rent control, we always think there's that outside chance it comes into play. So when we do our underwritings, we're very conservative in our assumptions for both market rental increases as well as our incumbents. So from a regulatory standpoint, we think about that from a Quebec issue. From a demographics, but the Quebec market is similar to the rest of Canada as relates to the aging demographics, the student side of things, the need for life science. All those demand drivers that fuel our business model and our strategy are very strong in Quebec. And quite frankly, similar to the rest of Canada, we're lacking supply here. We don't have enough beds for our seniors. We don't have enough medical office to support the healthcare system. So, from our standpoint, Quebec is very similar to the rest of the market that way.